In today's show, I'm going to be talking about one of the sectors in crypto that I believe is extremely undervalued. And this sector, of course, has gained the attention of the public in recent times with many different events happening on chain, many different airdrops, a lot of transaction volume now coming into this sector. And of course, that sector is layer twos. And I do believe that in the future, layer twos offer a huge opportunity for us to capitalize on one of the biggest growing trends in crypto. So in today's show, I'm going to be going down the rabbit hole of L2s and looking at 4 of the biggest layer 2s in crypto and the coins that potentially we can invest in to benefit from this narrative. And I'm going to explain exactly what layer 2s do, how to take advantage, and where the space is heading going forward based on statistics, based on fact. And I do have data in this video that I want to show you to represent why I do believe as a whole, the landscape of layer twos still has a lot of scope for growth. And it isn't just a fad in the month of November or the month of December in 2022. And this is a space that can continue growing significantly in the future. So without further ado, let's get into the show. Let's get straight into it. So to understand what a layer 2 does, first we have to understand what a layer 1 does. And for the people that don't know exactly what a layer 1 does, it refers to the fundamental base level chain in a network. An L1 blockchain provides the most essential service to a network, like recording transactions on the public ledger and ensuring adequate security. It is basically like a decentralized internet for you to build smart contracts on top of that settles transactions on top of. Now, there's 3 core components of an L1 that makes an L1 an L1. The first one is a layer 1 must produce blocks. So the individual units of the blockchain, which are essentially called blocks, of course, are produced by miners if you're on a proof of work network, or validators if you're on a proof of stake network, and they're recorded on the network's layer 1 chain. The second factor is transaction finality, which is the assurance that a transaction cannot be changed or undone. It's the point that a transaction is recorded in an irrevocable state. And the amount of time this takes can vary depending on how a blockchain is designed. We've seen blockchains with very fast TPSs like Solana, blockchains with slightly slower TPSs like Ethereum that sacrifice speed for decentralization. It's a large spectrum in terms of how quick a blockchain is at processing transactions, but that is what transaction finality is. That's the second component. And the third component is the native asset component, which is cryptocurrencies that are used to pay transaction fees and reward miners, validators on L1 blockchains. These are called coins. So obviously Bitcoin for the Bitcoin network, Ethereum for the Ethereum network, ADA for the Cardano network, and the list goes on. And they're necessary for the functioning of the L1 chain for 2 reasons. If you're on proof of work, you need to mine blocks and mine these coins via mining blocks. And if you're on proof of stake, obviously you need to stake these tokens in order to secure the network as a whole. So native assets come to the forefront of the L1s. But the thing is, L1s have a major limitation. And this limitation comes from a theory called the blockchain Trilema. And that theory states that as of now, it's extremely difficult to get all 3 pillars of the blockchain Trilema: scalability, security, and decentralization, all at the same time. And this is the major constraint we've seen to this day of layer 1s. Now, the blockchain Trilema refers to the fact that no public blockchain has yet been able to optimize all 3 of these factors. And it's an iteration of the CAP theorem developed by computer scientists in the 1980s, which states that decentralized data stores can only provide 2 of the 3 given circumstances simultaneously, so that they can't fulfill all 3. Now, this is an old theory, but for a blockchain to be secure, it must be truly decentralized with many participating nodes spread over the world geographically. But true decentralization, and this is the thing I think most people in crypto fail to realize, true decentralization comes at the cost of scalability. So many miners, validators, taking part in a consensus protocol, the more nodes you have, the harder it is to get network throughput. That's just one of the trade-offs you get when you have more nodes and when you try to scale. So although the blockchain Trilema is stated as a rule, it's not necessarily the case. I think in today's landscape, we're seeing many different trade-offs. Like a chain like Solana may trade decentralization for throughput. A chain like Ethereum has obviously chosen decentralization over scalability. Every chain has made trade-offs until we get to a point where we can balance the 3 pillars to the extent that A, the market is happy, and 2, the network is functioning as required. But here's the major problem. We are growing at a very fast pace. Now, this isn't a problem because it's great for crypto as a whole, but it's a problem in terms of scalability. Because if we look at crypto adoption versus the internet, we are growing extremely quickly, and we are on track to hit 1 billion users were basically where the internet was in 1998 in crypto in 2022. So we're growing extremely fast, and the problem is networks like Ethereum, they just can't handle the influx of users that have come on to actually use the chain. If we look at the Ethereum average gas fee chart throughout 2020 and 2021, we saw these crazy spikes. And even to this date, we are still seeing an extremely expensive Ethereum gas price. So although the gas prices have certainly come down, think about this. If you have 1 billion users using the network, $1.45 per transaction is still way too high. $3 per swap is still way too high. For the average retail user, let's say if they're conducting 50 swaps a day, that is still way too high. And that is exactly why layer ones have come in, because they're needed to help Ethereum scale due to the extremely high gas fees we've seen. And even on a lot of other L1s during the bull run, like Avalanche, even Phantom during the Solidly hype, even those gas fees started to reach like $1, $2 when they were doing 2 to 3 million transactions per day. So imagine if those blockchains were doing 50 million transactions per day, as next cycle it's very much could be the case. Are just not going to be able to handle it. So that is where L2s actually come in order to kind of underpin Ethereum, because as we validated before, the more nodes on a network, the more decentralized it is, but typically the harder it is to scale. So what are layer 2s and how do they fit into the picture here? Well, layer 2s technically refer to a set of off-chain solutions, so separate blockchains, built on top of layer 1s that reduce bottlenecks with scaling and data. Payment platforms like Visa actually have already implemented their own version of layer 2s. So instead of separately managing thousands of daily microtransactions from a vendor like Starbucks that would clog the network in minutes, Visa groups them into batches to be settled in the banking system at regular intervals. And that is essentially the exact same thing that layer 2s are doing. There's a good analogy that I think does a great job of explaining layer 2s. Now, when the network is less scalable, so this is referring to L1s, it gets congested and affordability also becomes a major factor in the play. Just imagine, what would you do if you were on a highway and you were stuck in traffic? Look for a connecting road to offload some of the traffic and ride through the journey. That's exactly the difference between an L1 and an L2 in a nutshell. That L2 is that connecting road that offloads traffic from that main highway that gets very congested when a lot of people are trying to drive. And that's what an L2 does. It offers a path of diversion to settle transactions off the base layer to unclog the base layer, essentially. So they provide a second framework where transactions can take place separately from the layer 1. And this means that a decent amount of the work that would be performed by the main chain can be moved to the second layer. So layer 2 applications then post the data of transactions to the layer 1, where it's secured in the blockchain ledger and history. So most L2s work like this. They settle transactions off-chain. This alleviates base layer network congestion, but then they post the data to the layer 1. So instead of the transactions settling on the layer 1, they settle on the layer 2, and the layer 2 speaks to the layer 1 and it verifies and it tells, let's say, the Ethereum network that, okay, we just settled a transaction. Ethereum, can you please record this transaction that we did the hard work of settling? And then that alleviates congestion on the base layer. So that's an explanation of how layer 2s work. Here's the thing. Ethereum wants to scale. Like we can clearly see by its roadmap, they are trying to scale. But this is going to be a very long process. It's a 5-part process, the merge, surge, verge, purge, splurge. And this process could well take a decade. We know how many setbacks we have with the merge. That was like a 3-year delay roughly since it was kind of like, or 2-year delay since it was touted to go live. The exact same thing is probably going to happen for a lot of these next steps. And although I'm bullish on Ethereum solving their issues long-term due to the vast amount of developers they have, I am of the belief that in the meantime, and the meantime could very well be the next 5 to 10 years, L2s as a solution are going to gain traction because L2s are going to gain network effect in the interim while Ethereum solves its issues. And by the time Ethereum solves its issues, you're not even going to know where you're settling transactions, whether it's on the L2, whether it's on Ethereum. You're not going to care. You just want the best user experience possible, and that's where layer 2s come in to help solve this issue in the meantime. And then by the time Ethereum's complete, we kind of have a very a vast interoperable ecosystem that incorporates L2s and L1s. So the title of this video is The Most Undervalued Sector. So let's break down the stats now. Let's go through the numbers behind L2s compared to L1s. And let's also start to have a look at some of the biggest L2s in the space and compare all of the biggest L2s as well. So this is a graph that displays the total L2 value market as of 3 months ago. Of course, it has grown since then, so we could probably increase this figure a little bit to, let's say, 5 billion. But this is the breakdown of layer 2s versus other sectors. Now, let's look at L1s. They have a market cap of 219 billion. Meme coins, 12 billion. NFTs and metaverse, 9 billion. Even privacy is 3 billion. And layer 2s come in at 3 billion. As I said, maybe closer to 5 billion now because it's been a couple of months since the data is collected, as the data is collected quarterly. But this is still just a fraction of these other sectors. And I think one can only assume that over the next decade, this is one of the sectors that could benefit the most from the adoption of new users, because the user experience on the layer 2 chains is just so much better than using the Ethereum network itself. But people still want to be able to deploy dApps on EVM compatible chains. So I do think L2s are an obvious solution here. And that is why 3 billion to me seems quite undervalued. Just comparing it to the other sectors, 3 billion compared to 219 for L1s, it's only reasonable that obviously L2s are never going to overtake L1s, but it's only reasonable to assume that this discrepancy over time will start to decrease a little bit. And we have seen since the trough, so since the very bottom in July, layer 2s have performed a lot better than some of their counterparts, because this is the narrative that's taking hold. The market's not stupid. It's starting to realize just how much adoption they're getting, and we can look at the adoption metrics. This is the Ethereum gas spent on L2 activities. We can see that it's skyrocketed. It's on an exponential growth curve. So this is the amount of ETH gas that's being spent on, let's say, Arbitrum, Optimism, and these other L2s. And if we see it as a representation of monthly gas, we can see a very similar trend as well. The layer 2 transactions. This is extremely interesting. This red line is the layer 2s, and the blue line is Ethereum. Now, for a while, layer 2s were very far behind Ethereum. Ethereum was leading the pack significantly. We're now starting to see layer 2s overtake, even at some points, Ethereum transactions itself. And this trend is becoming clear that layer 2s are eventually, and not even eventually, maybe even within the next couple of weeks or months, overtake Ethereum. Because we're already seeing days where layer 2s have overtaken Ethereum per transaction. So it's starting to gain a lot of traction in terms of usage. We can also see this in the TVL, with now $4.41 billion being locked on layer 2s, Arbitrum being the biggest, then Optimism, then BYBIT DEX. Obviously, MATIC factors in here as well. We'll get into MATIC in a second. But we are starting to see L2s gain a lot of steam in terms of not only transactions, but also TVL. And if we look at DeFi Llama, we can see here that Arbitrum, Optimism, and some of these other L2s are now starting to come into the picture as top 10 protocols in terms of TVL. And it's interesting because in many cases, their market cap to TVL ratios, like Optimism, for example, are significantly less than their L1 counterparts. So look at Optimism at 0.42. Look at something like an Ethereum at 6.33, BSC at a 9. We're starting to see a lot of TVL come into the network, but the networks aren't necessarily growing in terms of price at the same pace of their usage. So now what I want to do is break down the top 4 L2s and give you a little bit of a comparison, because what I want to start doing over the next few weeks on the shows is deep diving into the ecosystems of specific L2s. So deep dive on Arbitrum. Look at some of the small cap gems. Deep dive into Polygon. Look at some of the small caps and the mid caps launching on Polygon that are exciting. But I need to do this video first because you need to understand where each ecosystem sits, how each ecosystem works, and how L2s fit into the total picture before I can do those videos. So this is almost like an introductory course to L2s, so I can start putting out that kind of content. Now, the first one is obviously Polygon or MATIC. This has been the strongest performer out of this entire market, and is also the most highly ranked L2 in terms of market cap, coming in at rank number 10. Now, some people argue MATIC isn't even an L2, because this is technically how it works. Ethereum is the settlement layer, but Polygon uses a variety of tools. They call themselves the Swiss Army knife of scaling solutions to scale Ethereum. So it does so via their side chains, but it also aims to do so via utilizing a variety of inputs like ZK rollups that can essentially give Polygon adaptivity. Now, if you look at its architecture, it does work very interestingly because it's kind of got a plug and play design. And what this means is that Polygon isn't linear. They can kind of plug and put in different, like ZK EVM, different scaling solutions that can contribute to the Polygon network that eventually settles on the Ethereum layer. So we can see this is how it works. MATIC's got a side chain. These are the Ethereum root chains that speak to the side chain. And MATIC can have basically unlimited side chains that all use different tactics, I guess, if you will, to scale. And these talk to the Ethereum mainnet and let Ethereum know when they've validated transactions. So I do think MATIC has an interesting design. The tech itself is not as good as some of the other L2s yet. I think MATIC, from a tech perspective, is a long-term bet. They are implementing zk EVM, as they announced recently. They are implementing other scaling solutions as well. But right now, if you've used the MATIC network, you know it's a little bit slow. You know it's a little bit congested. I think you're betting on the BizDev team due to the incredible partnerships they've been able to pioneer. I mean, I don't even need to list them. You guys know, like Disney, Nike, Reddit, Starbucks, NFL, DraftKings, amazing business development. And you're betting on, since it's getting that kind of retail adoption, that in the future they can also implement their technology upgrades to the point that the network operates as well. So you're kind of betting on the BizDev over the tech right now, but certainly the tech's got potential. It's just not quite there yet. But that's also exciting because if it was there, then MATIC probably wouldn't be top 10. It'd probably be top 5. But we are seeing the usage really skyrocket with daily increases of 200,000, 300,000 daily users, 400,000. Like, it's kind of crazy here just how many addresses now have access to Polygon. This is also because they had their Reddit NFTs. So if you wanted a Reddit NFT, technically you're a Polygon user now. The Starbucks loyalty program that's launching, technically you're a Polygon user if you mint some of those NFTs. So that is also helping their adoption as well. And the daily transactions are also very solid. Yes, they've dropped from the bull run, as many other chains have, but they're still pretty solid at 3 million transactions. So that's Polygon. It's the one you guys know the most. As I said, it's kind of like a hybrid L2. It's not like a direct L2 like Arbitrum or Optimism are, but it's probably the biggest. What I'm actually doing at the moment is building a portfolio on Polygon. You guys know I said over the next couple of weeks, I want to go into the ecosystem a little bit more. That's exactly what I'm going to start doing. And where I'm going to be doing it is nested. So I've been DCAing into select assets. We've done very well on some of them. Link up 16% gains. 3.5%. It has come down a little bit, but overall, the portfolio is net profitable. And we have 77 people copying the portfolio along with me now. So we're going to be DCAing this stablecoin balance into the market over the next 6 months to 12 months. We're taking a slow approach, but we're going to build the ultimate Polygon portfolio. So if you want to copy and join along, there's the first link in the description to copy my nested portfolio, and 2 lucky copiers will win $1,000 next week. Very excited to continue on this journey. I'm also going to start an Arbitrum portfolio as well. So if you want to copy along, you can do so in the description. Let's move on to the second layer 2 that is probably gaining a lot of traction as well. And this one actually had a massive airdrop. I think you could earn almost 6 figures off the airdrop if you were early to this. And they are doing a second airdrop soon as well. And that is Optimism. Now, Optimism uses something that we call optimistic rollups to scale. So Optimism is an L2, utilizes optimistic rollups, and we've seen it grow quite significantly over the past few months. Just taking a look through its ecosystem, it has gained quite a lot of TVL relative to other chains. I think it's 537 million TVL now. You can make the argument it's even higher if you kind of double count where liquidity is being staked. But we can see that it's developing quite a flourishing ecosystem of over 100 dApps. And it's quite an exciting ecosystem as well for that reason. And if we look at Optimism's growth over time, we can see month to month in terms of its transactions, it's only been gaining steam. And this is why I think at this point you can't really ignore L2s anymore, because look at this monthly increase, 1.7 to 2.8 to 3.9. It's a very exponential increase because it almost doubled in the last month from 6.6 to 10.8. Obviously, December is only 5 days in terms of the data. That's why it's at 2.1. But if we take the 2.1 that's been conducted in the first 5 days and we scale that versus the entire month, well, then we get a figure that surpasses the November transactions per month. So even based on December, the projection is that it hits 11 mil and continues to grow. So Optimism has been gaining a lot of strength as well. And we can see this not only from the retail perspective, but from the development perspective, because one of the key factors with any chain, but specifically L2s, is gaining development activity, gaining developers that want to deploy on these chains in order to attract new users. And one thing we have seen L2s do very efficiently is gain development traction. And the reason for this is because it's EVM compatible, it's very easy to deploy cross-chain, and because there's now a lot of users, you kind of get that flywheel effect of more users using the chain, so more devs decide to deploy on Optimism or Arbitrum, and then more devs deploy dApps because there's more users, and then more users come to use the dApps, and it's kind of like a flywheel effect. That's exactly what we're starting to see on a chain like Optimism. Now, here's the issue with Optimism. If you are interested in investing, it is a little bit risky, and the major reason why I haven't invested is because of this. 77% of total Optimism tokens remain locked. So 3.4 billion versus the 1 billion that is currently unlocked. Now, this vesting schedule is quite a long schedule. The next unlock event is not for 174 days. So as a trade in the short term, I don't think this matters. But if you are planning on holding these L2s for, let's say, 5 years, which I think is a valid approach considering that's probably how long it's going to take for Ethereum to kind of sort of shit out, then I think it does become a lot riskier holding Optimism. I don't necessarily think the same can be said for Arbitrum, though, which does have an upcoming token launch. And this is the next one that I want to look into. Because Arbitrum is, this is undoubtedly the king of L2s right now. If you discount MATIC, Arbitrum is the one that is gaining the most traction. And we can see this because the daily active addresses is now surpassing 60,000. The daily average transactions is also surpassing 654,000. And the TVL has surpassed 1 billion. So we've seen monumental growth in the Arbitrum ecosystem. And we've seen some of the best dApps in crypto starting to deploy on Arbitrum. We got GMX, obviously their biggest dApp, which is the Perp DEX that deployed on Arbitrum. We've seen the Uniswap pools do quite well, as well as the Curve pools, with $65 million and $78 million total TVL, respectively. We've seen the Aave lending platform gain traction as well. Obviously, we've got Stargate from Layer2 deployed here as well. Synapse, which is a cross-chain bridge, and many other dApps which are now starting to deploy specifically on Arbitrum. You've got Dopex, which is the options exchange. I'm a big fan of this. You've got Magic. You've got GNS deploying soon. Many great protocols are now starting to deploy on Arbitrum because of the factors that I spoke about before, the ease of deployment, given the fact it's EVM, and also because it has a lot of users. And one of the main ways Arbitrum has bootstrapped users is through Arbitrum Odyssey. And this is the NFT or airdrop campaign, I suppose, that you kind of complete quests. And these quests might be interact with GMX, interact with Dopex, bridge funds to Arbitrum, and you earn badges in the Discord. And the speculation that the more badges you get from the Arbitrum Odyssey campaign, the higher likelihood you have of receiving an airdrop. Now, I did do a couple months ago, back in October, a thread on how to get an Arbitrum airdrop since their token isn't already launched. I think if you have been interacting with Arbitrum for, let's say, the last 6 months, I think you have a good chance of receiving Arbitrum tokens. They should be launching Q1 next year. That is the current prediction on Arbitrum tokens. But if you haven't taken part in Odyssey yet, and if you haven't taken part in the ecosystem yet, it might still be worth doing just because it might only take you like 2 hours of work for the chance of an airdrop. But I will say that the chance of you getting an airdrop now is much, much lower than it was a few months ago if you haven't already started using the ecosystem. So maybe it's not too late to just have a punt, but for all intents and purposes, the likelihood is that the Arbitrum airdrop snapshot has probably been taken, but don't let that deter you from using the ecosystem because it's a very good user experience. And I think the major reason why we've seen this growth in Arbitrum is because it's just so fast and easy to use, even compared to Polygon. Like using Arbitrum is a breeze. It's quick. Transactions don't bottleneck. It's just a nice experience. And similarly to Optimism, they use optimistic rollups in order to scale as well. So they're both optimistic rollup solutions on that settle on Ethereum. So what's the difference between Arbitrum and Optimism? The volumes are a lot lower on Optimism, so the real yield narrative's not living in the same life as it is in Arbitrum, as we've seen through GMX. However, we are seeing a very robust ecosystem in Optimism starting to be built around the flagship protocols. I think we're seeing a lot more hype in the Arbitrum ecosystem due to the upcoming airdrop. Optimism had its airdrop. There will be another airdrop if you interact with the ecosystem. So I do think that's something to look at as well. But since they already had their major airdrop, I think most people are now starting to use Arbitrum. But in terms of user experience, they're both quite similar and they're both valid. They're both very, very valid ecosystems long term. And Slapjake says here, Layer 2 season's only just beginning. If you're reading this, you're here for it. I think one of the ways now, given the fact that these ecosystems are hard to invest in, apart from MATIC, I mean, you can invest in Metis. There's other L2s as well, zkSync. It's hard to invest in Optimism due to the unlocks. It's hard to invest in Arbitrum because they don't have a token. But, a lot of the value is being accrued on the dApp layer here. So there's a lot of great dApps you can invest in. And this is something I broke down on my Friday show, but also something I'll be going to do a dedicated show on is actually what are the dApps on Optimism? What are the dApps on Arbitrum you can invest in? And part 1 to that will be coming this week. But we can see that daily transactions on the optimistic roll-up, so Arbitrum and Optimism, they've both been increasing pretty similarly to each other. So it's hard to kind of pick faults in one of them specifically in terms of adoption when they have been following a similar growth curve. Maybe you even say that Optimism is more impressive here because Arbitrum has higher incentives due to Arbitrum Odyssey, but both are still pretty solid. Arbitrum does win on total transactions though, 72 million versus 46. It also wins on total transaction amount and total addresses at 3.2 million versus Optimism at 1.9 million. So they're both good ecosystems, but Arbitrum does have the advantage on the statistics side. Optimism maybe is slightly less hyped at the moment, though. If you want to trade on any of the L2s, you can do so on Apex, you can trade on Arbitrum, you can trade on Polygon, and you can actually leverage trade as well. So this is quite a cool place if you want to leverage trade. It's an alternative to something like a GMX because Apex is using their ZK rollups, so not optimistic, ZK rollups to power exchanges on the platform. Non-custodial. We've seen the issues with FTX recently. It's always good to trade on a DEX when you can, or at least diversify risk a little bit from centralized exchanges to decentralized exchanges. So Apex is a good option if you want to do so. And there's $190,000 of weekly trading rewards that they're giving in their trade to earn program. So if you just trade any amount, and it's quite easy to deposit, you just connect your wallet and literally deposit stable coins. If you trade on the Apex protocol, they are giving out a lot of rewards to users. So it's actually quite a good time to start trading while they're giving away millions and millions and millions of dollars of prizes. So the fourth L2 I want to talk about today is zkSync. Now, this isn't launched yet. This also potentially is getting a token, ZKS. So there is airdrop potential here as well. In fact, I do think I did a thread on this on my Twitter. Miles Deutscher, zkSync. Let's see if yes, October 20th. I did post a thread link. I'm not sure how relevant it is now, but maybe it's worth just doing some research because they did have an alpha testnet. zkSync is the next iteration. So Arbitrum and Optimism, they're optimistic rollups. We don't know what the final L2 solution is going to be. We don't know in 5 years' time what the best solution is going to be to this problem of scalability. We can only guess based on current information. And definitely one of the bets I'd be taking, and one of the guesses that I have, is that zkSync factors in somehow in terms of, or ZK rollups in general, not just zkSync in particular, factors into solving the scalability issue. We know Ethereum, as per their roadmap, they want to implement ZK snarks as one of the ways to scale. We also know that Polygon has ZK EVM coming. So we do know that it's a strategy that a lot of developers are now favoring to scale. But zkSync is one direct way that you can invest in this, and they should have a token coming soon. So look into zkSync as well. That's definitely the other L2 ecosystem that I would look into. There is a great thread that I won't bore you with today, although it's certainly not boring, by Zero Knowledge. I'm actually going to give him a follow right now because he puts out good content. And this goes through exactly how zkSync works and potentially how you can get an airdrop. The airdrop stuff might be a little outdated, but if you do some research on that, simply one way to do this would just be looking up zkSync airdrop on Twitter, and I'm sure there'll be tons of resources to kind of help guide you through an airdrop. This guide seems to be the most comprehensive one so far by Enigma, because a lot of these L2s, since they're so new, they're favoring the approach of airdropping to users, to bootstrap an initial user base instead of just launching a token in a bear market, diluting it to hell, and seeing a huge amount of sell pressure due to market conditions. So I definitely think the airdrop approach is a good one, and that's the one Optimism's taking. That's the one Arbitrum's taking. That's the one zkSync might be taking, just because of the benefits in this market you get from launching like that. And that's why it's hard to invest in L2s today. There are L2s you can invest in as well, like Metis, but these are the main ones, and these are the ones that I'd start looking at and start learning before you kind of move on to more degen speculative L2 plays. So I hope today's video does a good job at explaining what L2s are and how they work and how they factor in. And I do think there's significant scope for growth in this sector. And I hope you've kind of learned a little bit more now about how that works. I'm going on to my Instagram now to answer any questions you may have. If you're not following me on Instagram, after every single show on Crypto Banter, I go onto my Instagram and I answer live questions for like roughly half an hour. So if you have any question about crypto or life or just anything you'd like to know, or just even if you just want to hang out for a little bit, you can join the Instagram link in the description to my Insta. It's Miles_Deutscher. Also, give me a follow if you're not already following me, because I live stream there quite regularly as well. And it's just a good vibe. We just chat, have a good time. But thank you to everyone for joining the show. Crimson, he's here every single day. I'm going to talk about Casper. Not talking about Casper today, but that's one that quite a few people have asked me to cover. So a lot of people are shilling Casper. I'll look into it. In fact, I've already started my research, but I'll keep looking into it because, I like to do my due diligence before I talk about something in front of 600,000 people. So can US use nested? Yes, you can. Got to catch them all. Yeah, dude, the airdrop hunting is like Pokemon. It's definitely one great way to make your first few $1,000s in crypto. It's one of the easier ways to make a few $1,000s in crypto, to be honest, but it does take time and it's not free money like some people want you to believe. It does take a bit of dedication, but it's certainly something that you can do to make a few $1,000s. And I do threads on airdrops on my Twitter. I'm just trying to get you my most recent one. I misspelled airdrop. It's this one, which I break down 10 of the ones that I'm looking forward to. Not all of them might have airdrops, but some of them certainly will. So maybe it's a good starting point for you to look at some of the airdrops that you may have missed. Yes, keep you updated on my Twitter when it comes to airdrops. But Optimism, Arbitrum, they're definitely having airdrops. It's just whether the snapshot's taken is the only question. Amazing alpha. Appreciate it. Appreciate all of your support. And yeah, my goal in life on Crypto Banter is to make this the highest alpha per minute show, not only on the channel, but on YouTube. So hopefully I'm able to do that. And thank you for hanging out every day at 7 p.m. EST. I'm sure tomorrow's show will be even more alpha packed as we try and level up every single day. All right, I'll see you on my Instagram for those that aren't already joined. Or if you don't want to join the Insta, I'll see you tomorrow. Peace out.